Have you ever wondered how the ultra-wealthy do it? They're flying private, living in luxury, and somehow they're often paying less in taxes than most people you know. Nope, forget about secret Swiss accounts or some hidden loophole you would see in a spy movie. It's actually a strategy with a name that sounds almost like a joke. Buy, borrow, die. And today, we're not just going to explain what it is. We're going to break down the powerful mindset behind it. This is about how the rich think in decades, not days, how they play a completely different money game and build legacies that last forever. It all comes down to three simple steps: buy, borrow, and pass on. And once you see how these three steps connect, you will never look at your money the same way again. All right, let's start with step one: buy. See, for the wealthy, money isn't for showing off, it's strictly for building. So their first move? They buy assets, things that grow in value over time. We're talking stocks, real estate, businesses, sometimes even art just sitting there, getting more valuable. Every single dollar they invest becomes like a little worker that never clocks out, working for them 24/7. Now, most people, they use their money to look rich, buying fancy stuff for that quick hit of dopamine. But the wealthy, they use their money in one way: to become rich. And that is the shift. You stop buying things that drain your wallet and you start owning things that fill it. Because the real goal isn't to look wealthy, it's to actually be wealthy by what you own. All right, now here's where things get really interesting. This is the borrow part. So they've got this big pile of valuable assets, right? Well, they don't sell them. And that is because selling means paying taxes. And let's be honest, nobody's cheering for that. Instead, they walk into the bank and basically say, "Look, I've got millions in stocks just sitting there. Can you lend me some cash against it?" And the bank says, "Yes, of course they do, because those assets are the perfect collateral." Now, here's the magic. That loan is not considered income, which means, you guessed it, no taxes. So they get to live their life, investing, buying yachts, all while their original assets are still in the background, quietly growing. It is the ultimate power move. They are using what they already own to fund their life, without ever breaking the system. Now, before you run to the bank, hear this. Debt itself isn't evil. It's just deeply misunderstood. Here is the key. The wealthy borrow to build. Most people, they borrow to consume. And that right there, that is the fundamental difference between leverage and liability. All right, this brings us to the final step. It's often called die. But let's be real, that sounds way too depressing. Let's call it what it actually is. Let's call it pass on. So, when a wealthy person passes away, what actually happens to all that wealth they built? In many countries, their heirs inherit everything, but not at the original price. They get it at today's full market value. It's a rule called a step-up in basis. In simple terms, all those gains they built up over a lifetime are wiped clean from the tax books. The next generation gets a completely clean slate, and they get to keep all the assets, free and clear. And get this, it's not some shady loophole. It's not illegal. This is literally how the system was designed. And just like that, the cycle continues. The family stays wealthy, not for just one lifetime, but for generations. So you see, this isn't really about avoiding taxes. It's about something much bigger. It's about understanding how to play the long game. Think of wealth not as a sprint, but as a relay race. One generation smoothly handing the baton to the next. That is legacy. And that is what true, long-term thinking actually looks like. Now, maybe you're sitting there thinking, cool story, but I don't exactly have a billion-dollar portfolio. And that's a good thing, because you don't need one. See, the real secret here isn't the strategy itself, it's the mindset behind it. The wealthy think in decades, not just to the next paycheck. They focus on building assets, not just covering expenses. They use leverage as a smart tool, not a trap. And they plan for a legacy that outlives them, not just a lifestyle for themselves. And the best part is, you can adopt this exact same mindset, starting right now. How? Open a retirement account. Learn what an index fund is. Maybe start a small side business. Or just buy your very first asset. even if it's just a single share of stock. Never forget this. True wealth doesn't start with a pile of money. It starts with the right mindset. The wealthy aren't necessarily luckier than you, they just play a much, much longer game. And your own long-term game? It begins the very moment you decide to start thinking differently. If this got you thinking, do me a favor and hit that subscribe button. I break down these real-world lessons into simple, actionable steps. And I really want to know, drop a comment and tell me, what is the very first asset you're going to build? Because at the end of the day, understanding money, it's not about greed, it's about growth. And your growth, it starts right here.